Morning. Welcome to the very first Brisbane property market update for 2025. This is going to provide a summary of all of the data that has been collected throughout the month of January. Now, keeping in mind, January is typically a quieter month in real estate, and a lot of the activity doesn't really ramp up until after the Australia Day long weekend. But let's have a look at what it says anyway. Listing volumes in Brisbane were higher throughout January. As you can see from this graph, there was quite an uplift in total listings, up 4.4% year on year and up 9.8% month on month. Now, that is a seasonal trend, so it is not a surprise. What we have found, though, is new listings in Brisbane really escalated, 32.7% increase month on month, which again is not surprising given a lot of property transactions or a lot of sellers hold off listing in December and they come through in January. But new listings even year on year were up 18.4% here in Brisbane. So that's great news for buyers that are looking in the market. A little bit more stock has come throughout January, and we'll be watching closely to see whether that trend continues. That said, as you can see from this graph on the screen at the moment, the long-term trend is still well below where it has been historically. So that is why overall supply is still constrained. Looking at sales volumes, which is an indication of buyer demand, year on year, it's up 5.1%. That's in the 12 months to January 2025. So still plenty of transactions happening throughout Greater Brisbane. Now, looking at buyer demand, auction clearance rates, according to CoreLogic, sat at 55.3% in January. Again, not a lot of auctions actually were called in January. Typically, an auction campaign would be 3 or 4 weeks, and a lot of those auctions fell into the first couple of weeks of February. So we expect those numbers to change slightly when we've got higher auction volumes. Days on market, currently at 22 days, according to CoreLogic, and 12 months ago, this was 19 days. So buyers do have a little bit more time, although I will say that quality opportunities are still transacting very quickly, and we are still seeing a lot of homes sell after that very first open home when there's high competition on some of these properties. Now, let's get into the data for the month of January. So these are the Hedonic Home Value Index results that are published by CoreLogic for all dwellings. First of all, you can see on this screen 0.3% monthly dwelling price changes here in Greater Brisbane. That translates to 1.2% quarterly growth and 10.4% annual growth. Median values for dwellings in Brisbane are the second most expensive, according to all capital city median dwelling values. Now, when we look at monthly changes in other capitals, we saw Sydney decline, Melbourne decline, and also Canberra decline. All other capital city markets continued to increase. So Australia is definitely not a single property market. There's different things happening in different areas. Of course, when we compare what's happening with CoreLogic data to what is being reported by PropTrack, we're getting a similar trend in that Brisbane is still a market that is increasing, although the rate of growth on a month-by-month basis is easing. It is still positive growth. You can see here 0.1% monthly change in dwelling values reported by PropTrack and 10.4% annual dwelling growth changes. We like to make sure that we are a little bit more specific in terms of which segments of the market are growing at different rates. So here CoreLogic data is showing that the bottom 25% of property values here in Brisbane have increased 3.1% in the 3 months up to the end of November. The middle segment of the market increased 2%, and the top valued properties, that is the most expensive end of the market, in the 3 months up to November increased 1.2%. So all segments of the market are in a state of growth, although the more affordable end is growing at a faster rate. Now, this is all dwellings, so it does actually group in units and townhouses into predominantly that lower 25th percentile. And what we will see as the presentation continues is that that segment of the market really is outpacing the housing or detached segment of the market. Looking at 12-month changes across all capital city markets for dwelling values, you can see there Brisbane's increased 10.4%, Adelaide and Perth ahead of Brisbane in terms of that annual change. But you can see the change in compared to all other capital city markets. So Brisbane, Adelaide and Perth really have outperformed. We have seen other markets actually fall in value or remain relatively constant over the same period of time that These three capital city markets that all have supply constraints due to low listing volumes, they have really escalated in value. Now let's look at the quarterly changes. So you can see here Brisbane quarterly dwelling values increased 1.2%. We're now in second place behind Adelaide, which has increased 1.8%. The story in Perth is that the rate of growth is really decelerating. It is starting to slow down rapidly. Brisbane on a quarterly basis is now growing at a faster rate than Perth. So it'll be interesting to see in the coming months how this changes. Of course, when we look at some of the bigger capital city markets, specifically Sydney and Melbourne, you can see the quarterly growth rates now well and truly in negative territory there. Looking at house values, we do like to break it down into different market segments. House values here in Brisbane throughout January increased 0.3%. That puts quarterly growth in the detached segment of the market at 1% and annual growth at 9.4%. The median dwelling value, I beg your pardon, the median house value in Brisbane now sitting at $977,343. Yes, Brisbane is the second most expensive house market according to median values across all of Australia, although some recent research shows that the price per square metre for what the dollar value buys, Brisbane is not the second most expensive market when you're looking at that indicator. Looking at the PropTrack data for the same month of January, you can see there for housing values, Brisbane increased 0.1% with 9.8% annual growth as well. And these markets, or rather this data shows that the markets of Sydney and Melbourne are still in a rate of decline as well. So the data supports the same trends. Back to CoreLogic data, looking at unit values now. So you can see here throughout the month of January, unit values jumped 0.6%. That's double the rate of growth when we're comparing to the house market. And that's not unusual. We have seen the unit market, that is anything that is attached, units, townhouses, it has been outperforming the house market for some time. And a lot of that is due to affordability constraints. Quarterly growth sitting at 2.1% in this segment of the market and annual growth 15.8%. So nearly 6% difference there in the annual rate of growth between the house market and the unit market here in Brisbane. The median unit value now $685,291 here in Brisbane, making Brisbane's units the second most expensive according to median values of all capital city markets around Australia. Looking at PropTrack data now, and unit values increased 0.2% and 14% annual growth there. So again, PropTrack showing the same trends as CoreLogic. Let's have a look at what's been happening since January 2020. This is tracking the monthly change in house prices and unit prices here in Brisbane. Anything below that centre line is showing negative growth. Anything above is positive growth. So the dark bars are housing and the light bars are units. Now you can see there since March 2023, we've had nothing but positive growth month on month in both segments of the market. However, there is a downward trend in the rate of growth in both the house market and the unit market. And we can see there that the house market monthly growth has been less than the unit market monthly growth for many months now. And this is a trend that we expect to continue simply because of affordability constraints. Now we're breaking down the 12-month house and unit market growth across all capital city markets throughout Australia, so that you can see there in Brisbane, the unit market really has outperformed the house market. That's actually a similar trend when we look at Adelaide and Perth's market as well. The unit market, that is the attached dwellings market, is outperforming the single dwelling house market in terms of that 12-month change. When we look at the 3-month change over the last quarter, what you can see there is that house values, especially in Perth, have really started to slow down. And the unit market remains relatively consistent across those top 3 performing capital city markets. That's Brisbane, Adelaide and Perth. Adelaide's still performing overall the best in terms of house market and unit market performance. So some really strong results there. What's an interesting trend is the Darwin house market in the last 3 months has really started to escalate, and it's showing that it's the top performing house market in terms of quarterly growth across all of Australia. Of course, Sydney and Melbourne now in negative growth, and the house market is being more impacted than the unit market in terms of that quarterly change. Now let's have a look at vacancy rates. Throughout January, vacancy rates did increase slightly, currently at 1.2%. This is a seasonal trend. It is not uncommon, and we do expect those vacancy rates to come back again once next month's data becomes available. Rent price growth. In the house market, rent prices over the last 12 months have increased 2.9%. So the rate of rent price growth is easing throughout Brisbane in the housing sector, so tenants will find relief in that information. Unit prices in terms of rents increasing 3.3% over the last 12 months. That's remained unchanged month on month. So the rate of growth there fairly consistent, but it has come down significantly compared to where the annual growth rate was over the last 12 months. So where are we heading? Brisbane's market is trending as the second fastest capital city market when we look at quarterly value changes, and that's behind Adelaide. We did expect listings to increase in January off the back of some really tight supply in December. A trend we will be watching is this a sustainable lift that's going to continue, or will those listings plateau again? Because we really do need to see more opportunities available for sale to meet the current demand. Buyer activity has started out strong throughout January, especially for prices at or below the median value. So for houses, that is around that $980,000 price point. If you are in the market at that price point, you'll find a lot of competition, and even under that price point, it is a very competitive market. Units and townhouses are expected to continue to outperform houses in the current months. If you're shopping at the prestige end of the market, we're typically finding more activity in the off-market space compared to on-market. Buyer numbers are thinner in that market, but equally, there's more opportunity in the markets that might not be online. If you would like any further information, please scan this QR code. You can reach out to our team by booking a call from this list, and also there's some really fantastic resources for you over and above the information that we've shared in this presentation today. I hope that's been useful. We look forward to speaking with you again next month. Bye for now.